In this video, I'm going to show you the top 5 AI stocks that you're going to want to add to your portfolio for 2025. And don't skip any part of this video because I'm going to break down each stock and explain their strengths and why they are good picks to add to your portfolio. Let's dive right into the top AI 5 stocks to add to your portfolio right now. The number 5 AI stock to add to your portfolio is Intel. The reason why Intel made the list is because of the potential growth that could be sitting on the table. And the likelihood of that is high because with this current administration pushing for jobs at home and manufacturing, and the fact that Intel is opening up 2 new plants in the United States and adding to their already plethora of factories and building their own chips at home, unlike any other American company. AMD and Nvidia do not make their own chips. Intel does. This is where the strength really lies with Intel. The problem with the previous CEO, Pat Gelsinger, was the issue of him focusing solely on manufacturing chips in-house, which is good, but he focused in the wrong direction, it seems, and was trying to outsource and build chips for other chip makers, just like Taiwan Semiconductor does. And about 5 to 8 years ago, Intel started having problems when Taiwan Semi started making chips for Nvidia and AMD. And about 5 to 6 years ago, right around the pandemic, Taiwan Semi took the lead and took over most of the profits that Intel was seeing and really put a hurting on them. The issue here is being able to find a middle ground to be able to make their own chips, but still also sell their own products competitively enough to make profits. And if they're manufacturing their own chip, that very well could be hard to do. They're not going to be able to compete pricing wise with Nvidia or AMD if they're making their own chips as manufacturing products in the United States is more expensive. Where a tariff situation, where if Donald Trump has extreme tariffs, let's say on China and Korea and Taiwan and places like that, would actually help Intel. I don't think that's happening because the China deal is all but certain at this point and things are looking fairly strong. The only thing is Intel still remains into the unknown. And the tariff deal with China actually looks like there's going to be somewhat high tariffs still on China. It's not 100% or an exact where these tariffs are going to fall and what's affected. Most of the details haven't come out yet. But if China indeed does have tariffs that are in the 40 to 50% range, like it said in the previous report, this could make things expensive enough for Nvidia and AMD as far as importing these chips from China. And depending on how Taiwan makes their chips and the tariffs that Taiwan may face in the near and distant future, could allow somewhat of an advantage, I guess, so to speak, for Intel. So it's very possible there's that aspect to also consider, but not to mention they also have billions and billions of dollars in grants from the US government. And of course, the US government's going to back Intel because it's made in America and they have their factories here. So there's also that to think about. They have a new CEO and we're not sure where this direction goes. It's all up in the air, which is why it's number 5. But we can't deny that in the coming years, Intel very well could double, triple, or even quadruple in price just by making one correct decision, which would be a positive domino effect for the company. So one can't just sit on the sidelines and expect that one of the oldest tech companies in the world is just going to go into the night quietly and disappear. It is unlikely that that would happen. It could, but there's a very strong potential for Intel to do well in the future. And looking at Intel, when you really dive in and see 90 billion market cap, we go into the financials, 90 billion divided by 53 billion trailing 12 month, the total revenue shows us that the price to sales is actually really, really low. 1.7 price to sales, which is insane. If we go look at Nvidia's price to sales, 353 trillion divided by 148, that is a big difference, like a 22 price to sales versus 1.45. That means that Intel potentially could have a 10x return, which means if Intel achieves what Nvidia has achieved or gets anywhere close to it, even 5 years from now, this will be a $2,000 stock, which they would obviously forward split around 800 to 1,000, but that's not for this discussion. The real discussion here is that even if Intel only 6x'd in the next 5 years or even 8 years, that would still be an 80% return per year or more. There's a lot of potential here with a price to sales of 1.8. That is insane for a tech company. It shows that their revenue's coming in. It shows that their EBITDA is strong, but their cash flow is in the negative and their pre-tax and operating income are in the negative, which means there's a lot of expenses. There's a lot of cost incurred here going on. The revenue is also down, but it is coming in. And based off of their market cap, which, just so you know, market cap is also dependent on the cost of the stock. And because nobody's willing to pay for this stock and Wall Street's not willing to buy it, and there's a lot of big time investors that aren't willing to buy it, the price is down. The stock is definitely undervalued at the current price. Without a doubt, this stock is worth more. It's worth closer to $30 or $40 based on price to sales, but investors will not invest in this stock until they see proof that they're going to be profitable, that the decisions that are being made are accurate and good for the company. So as they get contracts, if they get them, and as they grow, if that happens, then big time investors, Wall Street, big companies, big banks, hedge funds would invest in Intel. And there is a lot of potential here, but it's a risk, which is why it's number 5. And I think that at the current price, it would make a lot of sense to just start selling put options down here around $19.50 or $19. If you can sell put options week in and week out, month in and month out, after about 6 months of not getting assigned, you cut your cost in half. You could get Intel $10 a share if you sell enough put options and don't get assigned, and you do it out of the money. I would be selling put options a month out at 19 every single month if you want to start adding up and getting the stock for cheaper. The number 4 AI stock to add to your portfolio is AMD. The only reason why AMD doesn't make it higher in this list is due to underlying concerns and potential issues like have risen previously with AMD, and a valuation discrepancy amongst analysts and whether or not they can drive growth further when they're trying to compete on price. And that is something that AMD is trying really hard to do, but they're doing a really good job. And Piper Sandler increased optimism in their GPU demand and scalability and raised the price target from 125 to 140, which is why shares on AMD are up. I did tell YouTube, I told you guys back in December and in January that AMD would do well, and they're right back to where they were at that time, and they're going up. And I also gave leap option trade in my Discord several months back that is now printing. So if you guys are looking to grow your portfolio, maybe you're new to the market or you don't even know where to begin, I would love to help you. You guys can join Discord at any time. Links in the information box below. You guys get 2 coaching calls a week. You can copy my trades. There's trade alerts. There's an Ask Corey section and modules from beginners to intermediate to teach you all the things that you would want to know. And there's over 6 hours of video on-demand modules to teach you all of the basics. Let me show you how to turn your losses into wins. Link to Discord is in the information box below. Getting back to AMD, I'm going to read this so you guys understand what's going on with AMD. Piper Sandler raised its price target, citing growing optimism in the company's graphics processing unit segment. In a note to clients, analyst Harsh Kumar said AMD's core client business is showing signs of recovery, pointing to early demand strength. Piper Sandler increased its price target at AMD to 140 from 125 and gave it a buy rating. The notes follow recent updates from AMD, which unveils its new M1350 series of AI accelerators last week and gave an early preview of the next gen M1400 platform. These products are designed to compete in fast-growing artificial intelligence hardware market. The rally in AMD comes amid heightened investors' interest in chip makers focused on AI workloads, a space where competitors such as NVIDIA and Intel and Marvel, as well as Broadcom, also operate. Looking at AMD, one of its strengths that I want to point out, you look at the market cap of $200 billion. We go to the financials and you'll see that there is $27 billion on trailing 12 month. That's a price to sales of 8. That is pretty good. It's also 4 times higher than Intel's, which shows you the potential growth that Intel could have, but there's a lot of risk there, which is why it's number 5. But even at a price to sales of 8, NVIDIA has 22 or near 22. So there's still a 2 to 3x return on the table, more or less 2 to 2.5 return on AMD, which would put it way up in the 275 to 300 range. In my opinion, I think 200 plus in the next 1 to 2 years is possible. I think 150 by the end of the year is very likely, if not higher than that, but it's really dependent on Lisa Su and if we get any word salads. So looking at AMD, we can see that they have a $27 billion trailing 12 month. We divide that into market cap, gives us a price to sales of 8. But even though that's 4 times Intel, which shows you Intel's potential, it is also less than half, almost a third of what NVIDIA currently is at 21 or 22. So it shows you that AMD has potential for a 2 to 3x return in the coming 3 to 5 years, maybe 7 years, depending on how things play out. I really, truly think this is the next 2 or 3 years. And it shows that even at a 2x, AMD could reach 300 plus in the coming 2 to 3 years. I think by the end of the year, it's very possible, if not likely, that AMD could reach 150 plus, maybe even 160. There's a lot of growth on the table. Net income is profitable. Unlike Intel, EBITDA is very healthy. Balance sheet's healthy. They are sitting on negative net debt of $2.6 billion. Anytime you have a negative net debt, you have no debt. Therefore, $2.6 billion in cash. This is also healthy. We look at operation activities. Trailing 12-month cash from operation activities, $3.46 billion. Free cash flow, $2.75 billion, almost $1 billion a quarter. Free cash flow is $750 million in a quarter, $727 million. So very healthy here. You can see the big jump on AMD. If I were trying to get in right now and I didn't already have shares, well, I have my AVP strategy and my double fib strategy, which I teach Discord, and I'd look at the price, and the average weighted price on AMD is really truly between 110 and 130. 110 to 130, or even 105 to 125. We're kind of in the AVP right near the bottom, because the bottom's around 110. So it's still a really good time to buy. I told my students to get in between 85 and 95. So they're all making money if they got in there. But right now, personally, I would like to go out a month and sell 115 puts going out a month. And if I do this consecutively, or you do this consecutively for a few months out, each time, 1 month out, each time you sell puts, then you can generate several $100s a month or more. You could eventually get your costs down where you get assigned at 110, then you're really getting in at 90. And that's how we do it. Consistently selling put options and where we think it's a fair price for the stock. And I think a very good price is now, but I really think it's even stronger at 105, 100 to 105, or even 110. And in order to get an average cost of 100 or 105, which is really good at the current price, we would need a discount. So if we sell 115s right here, that would be $10 to $15 out of the money. In order to get that much on a put option for AMD, I'll show you right here. Go to AMD. We'll go out to July 11th and look at put options. If we sell a 115 put going out a month, then this is going to get about $135 because of how far out of the money it is. Because 126, 115, it's pretty far out right now. It's a 16 delta. So we sell 120s. This would be $250 a month. So we do this for 3 months, and you're really getting in $7 off of 120, which is 113. So if you can sell 120s or even 118s for 2 or 3 months, then you're really getting in closer to 110, which is really good. But you missed the move. So there's also that risk. Buying now would be slightly better as far as not missing the move. And then if the stock drops, you can dollar cost average. It drops, dollar cost average. But the idea is to follow my 33-10 rule, which I teach in Discord. 2 on the bottom, 1 on the up. 2 dip, 1 up means you buy here, 1 here, 1 here, 1 here, 1 here. So it's 2 on the bottom, 1 on the top. You want to keep it to my 33-10 rule, which is a minimum of 3 trades per 10%. You don't want to go over 10% of your portfolio. But AMD is definitely a stock that you'll want to have some exposure to going forward because of the immense amount of growth potential. As you can see here, all the way up, even if it goes to where it was previously at 214, that is $100. It's basically double your money. And it could, in theory, happen at any time this year, next year. That's a lot of money. Double your money is very good. I'm not saying that's going to happen, but there's always that possibility. It only takes one good deal and a couple of good earnings to start spiking interest, and growth begins, and they could set themselves up for that. And I truly believe in AMD. I really do. It's a great company. The number 3 stock to add to your portfolio is none other than Microsoft, and their partnership with OpenAI is a pretty big deal. The only real issue going on right now with Microsoft is the fact that OpenAI is asking for a federal review of potential antitrust, anti-competitive behavior, because Microsoft wants to up its stake and acquire more of OpenAI. And this shows you the amount of competition between the big tech stocks like NVIDIA, AMD, Intel, Microsoft, Meta, Google. Everyone is competing with one another to try to buy out competition. There is antitrust issues with Microsoft. There's antitrust issues with Google, then Meta, now Microsoft. They're all trying to compete with one another to take each other out and to prevent others from competing with them, which is making things really sticky in the AI and the tech sector. But Microsoft, like I've said many times, is one of the biggest and best companies in the world. In fact, they're going to be the first 4 trillion club tech stock in America. I told everyone they would pass NVIDIA, and they did. And right now they're working their way towards 4 trillion. However, that could change at any time with NVIDIA, but I don't think it will. Microsoft just has a very big footing in tech and in AI in general. Antitrust issues that OpenAI is trying to furnish fizzles out and doesn't really amount to much, if anything at all. Then Microsoft will continue to do what they do. They have Windows and they have gaming, Xbox. There's a lot of games in the Xbox store that's ever growing. They have that whole sector of their business. They have hardware. They have other software as well. That's not the only software. Windows isn't the only software they deal with. They have Open 365 or the Office suite that they also have. And they're working on AI and growing that with OpenAI as well as other companies. And there's been partnerships with other companies as well. Microsoft is trying to get a very strong footing, which is why they're trying to acquire more of OpenAI. Looking at Microsoft, they're at all-time highs right now. And when we look at 3.56 trillion and go to their financials and look at trailing 12 month to get a price to sales, you can see it's just a little under 4, like 3.5 roughly times 3. So it's really about a 13 price to sales, which means there's still about 80% growth left in them as far as how it's relatable to other tech stocks. And they're going to be the first 4 trillion club. Based on the company's growth profile, sales and analytics, and their history and where they are likely to go, it is projected that Microsoft will reach $500 by the end of this year and $600 by the year after. So there is still about a 25-30% return in the next 2 years on the table for Microsoft. The reason why it makes it higher in the list is because there could be even more growth potential in Microsoft than that. And there are some analysts that have weighed in and believe Microsoft could reach 1,000 in the coming 3 to 5 years. So there's potential for a 2x return. But what makes this better for number 3 than the previous 2 picks, AMD and Intel, is that it's safer, less volatile, safer, with a more proven track record. Microsoft, ultimately at the current price, I would like to have gotten in earlier. I already did, sold out, made profits. But if you were looking to pile up stock on Microsoft, then you'd want to buy 2 on the dip, 1 on the up. If you don't own any Microsoft, the idea would be to get in my AVP, which is what I teach my students in Discord. And the AVP on Microsoft is between 400 and 425. So anywhere between 4 and 425. So what I would want to do is I would want to go at a month at a time selling 440s, 430s. This way I could add up the profits to lower my cost. If you go out 1 month on Microsoft, you'll see here that 440s are about $100 a month. They're a delta of 8. It's not quite enough. You'd need to sell 450s or 455s. You do this for, let's say, 4 months. You sell 16 to 20 deltas for 4 months at a time, and you'll end up having an average cost of 440, 435, depending on how many months you sell them for. You can do this over time, but you are also risking losing out on the move. I, for one, would not want to just buy Microsoft at 478. If a dip happens and it pulls back, it would probably go to the 445 or 439 range, somewhere in here, and maybe dip a little bit more. That range is between 435 and 450. That's going to be your top range where the stock could pull back. There could be a $27 pullback or more, and this is why I only buy some shares at the top, and then when it falls, I double down to keep that average lower, which is why, we dollar cost average. The price right now is a little on the higher side, but still, if you sell put options several weeks or a month out, even at 460, you could still get get your average cost below 460 over time. Just be careful, be safe with your portfolio. Microsoft is a great stock. If you buy it at the current price, just be prepared to dollar cost average. If it goes back to the average weighted price, which is one of my masterclass strategies, it could go back to 430-ish. It's very possible that could happen, and then it runs again. This is typical of the stock market. These things happen. But ultimately, when we look at the financials, we can see they bring in a lot of money, $250 billion a year in revenue, operating income $122 billion trailing 12 month, net income is $96 billion trailing 12 month, EBITDA $151 billion, balance sheet $25 billion in debt, assets cover liabilities easy, cash flow very high, operation activities $130 billion trailing 12 month, free cash $70 billion, $20 billion a quarter, although quarter 225 was a little on the weak side. The rest of them are over $20 billion a quarter. So Microsoft, very strong, very stable company. It only really makes number 3 because of its safety and stability. If we were going off of growth potential only, and there's no safety factored in, then it would probably be number 5, and AMD and Intel would be 4 and 3. But we also have to factor in safety and volatility and proven track record, which Microsoft has. The number 2 AI stock to add to your portfolio is Google. And the only reason why Google didn't make number 1 is, well, because number 1, you will find out real soon. And stick around because I also have a bonus pick for you guys after we talk about number 1. But first, let's talk about number 2, which is Google. And the reason why Google makes the list yet again is because of Gemini and Willow. Gemini being their AI and Willow being their quantum computing engine. And Willow is going to be the king. And I've been saying it for a long time, the king of quantum computing. You could look at Rigetti Computing or QBTS. It doesn't really matter in my opinion. Google is going to be the king. It's going to be NVIDIA of quantum computing. Google already has a foothold in AI and quantum computing. Not to mention they have Google Home, which works with all kinds of RGB lighting, interior lighting fixtures, cameras, things that you control from the inside of your home, third party and made by Google. Google makes Nest. They make cameras. They make phones. They make hardware for the phones. And they're partnered with Qualcomm making Google and Android phones. Not to mention they're involved in quantum computing and have a very powerful engine called Willow. They have YouTube, AdSense, Google ad revenue, and they run the biggest and baddest advertising in the world, which is Google ads and Google ad revenue across Google and YouTube with YouTube video ads. All of the video ads and all of the YouTube videos, including the one you're watching right now, is run and managed by YouTube and Google. And AdSense, which is a part of Google. When you think of this as a collective, they're involved with Google Home, working with different hardwares in your home as well as the Google Home itself, Google hardware, Google Nest, Google phones, Google search engine, Google AI Gemini, Google AdSense for YouTube and YouTube revenue and advertising and YouTube itself. And then on top of all of that, you add on Google Willow, which is their quantum computing. At the end of the day, Google, in my opinion, is one of the best, if not the best AI stocks you can buy because of its immense power and data-driven precision in Willow. When you think about AI and you think of quantum computing, you also need data. And nobody has a more powerful search engine than Google. They have the data. Even if search engines were to go obsolete now in form of AI, it wouldn't matter. They've collected all of the data. They're a data acquisition hub. So very powerful. Let's take a look at Google, and I will show you guys when we look at Google's 2.51 trillion market cap. We go to financials, 2.15 divided by 360. So this is going to be about a 7 price to sales or 6.5, which essentially gives them a 3 to 4x return, 2.5 to 3 on the more realistic side of things. You could see a 2 or 3x return on Google in the next 2 to 3 years or 3 to 5 years, especially with quantum in the next 5 to 10 years. So long term, at least 2 to 3 years, Google is poised to move because of all of this. Look at the revenue, 90 billion a quarter, gross profit 53 billion, pre-tax income is 40 billion a quarter, 133 billion trailing 12 month, net income, which is very important, 34 billion a quarter, 111 billion trailing 12 month, EBITDA 135 billion trailing 12 months. We go to balance sheet, which is very important, negative 67 billion. Google has 67 billion dollars in cash, which is up from 63 previously. $67 billion in cash, no debt at all. They have enough assets to cover liabilities 4 times over, and still have $67 billion in cash. Free cash flow is between 13 to 25 billion a quarter. They have a trailing 12 month at this rate is going to be about 100 billion a year in free cash flow. This is insane, and Quantum hasn't even taken off yet. It's a no-brainer to look at Google as the top 5 AI stock, and the only reason that it's not getting number 1 is, well, because of number 1. We'll get to that, but actually sitting here right now talking to you, I feel like it might actually be better than number 1 because it's actually undervalued and number 1 is slightly overvalued, but there's reasons and we'll get to those. Looking at Google, my AVP is between 150 and 177. Again, it's a strategy I teach in Discord. If you're looking at my AVP strategy, it's very powerful. 150 to 177. Google's near the top of that, so there's a lot of resistance up here. If you don't know what AVP is, it's my average weighted price, which is built and designed over the years by me off of hedge fund data, dark pool data, and hedge fund strategies, and it works very well. It is ultra powerful at gauging the area and average weighted price area of a stock. In fact, it's more accurate in many ways than Bollinger Bands, and I love using this strategy. I teach it to my students in Discord. If you're having a hard time in the market, let me show you how to turn these losses into wins. The link to join Discord is in the information box below. I look forward to helping you guys out if you want to make the profits that my students are making on the screen. If you want to be one of their success stories, going from 8,000 to 40,000 in 4 months, 300,000 to 800,000 in 7 months, or other students that have went from 100K to 150K in 6 months. I have many students that are making exponential gains, but everybody who joins my Discord grows at their own rate. But the one thing they all have in common is they are all profitable, and we make consistent profits because my trades and the way I do things is safe and my metrics are very accurate. I look forward to seeing you in the Discord real soon. So to get into Google, what I would do is I would like to go out at least a month selling 165 put options. If we go to Google, we can see that if we were to sell put options out to July 11th at 165, it's about 120. If we go to 170, it's $200. So on average, we're making $200 a month, which can lower our average cost by $2 every month that we're doing this. If we go out weekly and sell 167s weekly, it's actually a little bit better. You could do this on the previous stocks as well. We would make about $250 a month selling 167s. And as long as we're not assigned, because the current price is 176, we take 167, $2.50. At the end of the month, we're at 164. Even if we get assigned in 1 month, our average cost would be 162. And this is how you lower your cost. If we're selling put options down here at $2.50 a month for 2 months, then you got to take $5 off, and our average cost is down here, which is really good. So I would like to sell weekly put options at 167 and 165, week in and week out. Try to time it with 20 deltas. And if you get assigned, let's say at 167 your first week, well, then you'll wait for the stock to drop, consolidate, settle, and you'll dollar cost average following my 33-10 rule. If you guys want to know more about the 33-10 rule, I teach it in my Discord. It is going to be a very powerful strategy for you to implement in your portfolio along with AVP. When you use them together in combination with my double fib and my RSI down here, my specific strategy on RSI and my specific settings, it works very well for gauging stock movement like Google or Meta or Microsoft, or pretty much any stock. Doesn't really matter. The number 1 AI stock to add to your portfolio is none other than Palantir. And I have mixed sentiment on Palantir because it's overvalued at the current price, but there's a lot of things that go into Palantir that make it the number 1 pick. NVIDIA did not make number 1 because it has a majority of market share. There's virtually 0% that they'll gain any footing in market share. They're only going to give up market share, meaning they're still going to grow. But this exponential growth that we're used to seeing on NVIDIA, going from $100 to $200 in 6 months or less, is not going to happen anymore. And this 50% growth month in and month out, or quarter in, quarter out, is slowed down a lot. In fact, over the last 14 months, the stock is right where it was 14 months ago, virtually no gains at all. I'm not saying that's going to happen forever, but the times of having an earnings call on NVIDIA and having a 50 to 100% gain or more are over. This was post-COVID during high inflation, an inverted 10 and 2 yield on the bonds. The market was inside out. There was a lot of inflation, recessionary concerns, and there was a lot of extra activity in the market because everybody was trying to get rich and work from home, and now everybody's back at work. It's a different environment, and this is unlikely to continue based on a lot of different data points that I just mentioned and many more that we don't have time to get into. But number one is definitely Palantir. The reason why Palantir is number one is because in a sense of what we got going on in the world right now with geopolitical issues, Palantir has 50% government contracts and about 50% commercial, meaning if there's geopolitical issues, it won't really hurt Palantir because the government's going to use Palantir in war. And if there is no war, no geopolitical issues and nothing, then their commercial contracts are also massive and are pretty close, if not 50% of the company. So they're poised to do well either way as long as their company keeps doing what they're doing right now. And their growth year over year is impressive and nothing short of brilliant and incredible. And when you look at their AIP, and if you look at their AIP platform, it can implement and make decisions for companies and parse data and make these decisions that would otherwise take weeks or months, and it can do them in days and sometimes hours. This is very powerful, and Palantir is pioneering that. They're essentially the NVIDIA of AIP and overall AI infrastructure in government and commercial data, and involving AIP in this type of environment can be very beneficial because Palantir's Maven and their other softwares, Palantir's Project Maven was valued at just under $500 million, a 5-year contract with the government. And when you look at what it can do, it can assist government agencies all over the world by parsing data and linking it together and doing what humans can only imagine doing in months, and it can do it in days or hours. It is incredible. It's the way of the future. And as long as Palantir doesn't have any hiccups or major mistakes or any malfunctions or something bad doesn't happen with the company making bad decisions or bad management decisions, and things keep going the way they're going, they are the future of AIP and AI implementation. And I think that they are going to be the king of the hill. And if things keep going the way they're going, Palantir could see themselves to a $300 to $500 price tag in the coming 3 to 5 years, which essentially is a 2 or 3x return. And with the government side of things and the government contracts really puts Palantir on a pedestal because all of the geopolitical tensions between Iran and Israel. We also have geopolitical issues between Russia and Ukraine, and of course, China, Taiwan. All of these scenarios don't fare well for a lot of stocks or the market or the economy, but for Palantir, they would only be good because this would be taken as a defense stock, so to speak. So it's very, very good to own. Looking at Palantir, we see a market cap of $333 billion, which is insane. This company had a market cap that was in the $50 billion just a year ago. It's not a bad way to make a 5 or a 6x return. We look at the income statement, $3 billion in revenue does not divide nicely into $300 billion. This actually pretty much gives you 100 price to sales, which is very poor. It does basically tell me that this company is overvalued by 8 times, meaning this stock technically on paper is only worth between $25 and $45, just depending on how you parse the data. But its potential growth and its exponential year-over-year growth, when you see here 1 year 500%, this is why it's priced where it's at. But realistically, at this particular point, is not worth it. But if things keep going the way they're going right now for another year or two, it will be far exceeding the current price of 130, 125, 140. Right now, it's on the high end of things. So I would not want to get into Palantir right now. What I would actually look to do is I would sell put options on Palantir. This is me. I would go out every 2 weeks, every month. We go 2 weeks at 125. There's $74. Not very good because of the current price. If you sell 130s going out a month at a time, 3 months would knock $10 off. So 3 months of put options would get you an average of 120. 6 months would get you 110. However, if the stock stays bullish like it's been, you could sell 135s, make $500 a month. You'd only have to do this for 2 or 3 months. And you'd have an average cost of 120. Ultimately, buying these stocks, dollar cost averaging and adding leap options 2 and 3 years out is also good for smaller accounts, but I prefer shares. What I ultimately teach is my 33-10 rule, buying 2 on the dip, 1 at the top. When you look at Palantir, more shares is better. So if this stock goes to 300, you're much better off with 1,000 shares at 140 than you would be with 300 shares at 80. It just would make no sense. You're still going to make more money. So no matter how you do the math, more shares is almost always better. So you want to add more shares. At the current price, it's heavily priced and overvalued, in my opinion. It only makes number one because of its safety and because of its geopolitical issues that could arise that would make the stock even stronger. But right now, the stock could fall back down to 120 at any time. But because this double top peak happened, the stock went up, worked its way up, and has come back down here, everywhere, and resisted this 120. You might as well forget all of this because this is becoming obsolete down here. So because of this resistance right here, which I'll show you with the arrow, and right there and right here, this has become the new low right there at 118. So now you might as well forget all of this in here because this is unlikely. That is the ceiling. Palantir would actually have to break through 118 before it had any chance of going down to 102. Like it would have to break that first, and it's already attempted multiple times. It can't even break 132. And there are times in the future, almost for sure, that it is going to pull back. And if it does, it's likely to pull back into the 120 range. So right now, my price target, I have now lifted from selling puts into the 87, 85 range. I think now more or less the 109 to 120 in this range right here, 109 to about 120. So essentially going 2 weeks to a month out and selling put options in the 125 range would be good, because if you sold these put options 2 months out, you'd have an average cost of 120. 3 months, you'd be at 118. So you can see how this is going to add up. And then if you get assigned, then you can dollar cost average if the stock drops even further. Palantir is a very strong stock, and based on analysis as well as the technicals and fundamentals of the stock, all of their contracts, their potential growth, analyst ratings, Palantir is likely to break $200 in 2026, and it's likely to break $300 in the coming 2 to 3 years. So essentially in the next 12 months, there's about a 50 to 75% potential return on Palantir. They also had their price target raised to 155 from Loop Capital. Mark Chappell expressed greater confidence in the company's AI strategy following recent investor meeting with CFO David Glazer, according to a recent note. You can see he raised his target, implying that the potential upside of nearly 15% from the current levels, reiterated a buy rating, describing Palantir as an early leader in enterprise AI software with a long runway for growth as pilot programs shift into full-scale production. I've said this. The analysis said Palantir's artificial intelligence platform AIP was the centerpiece of the presentation. AIP combines enterprise data, large language models, and internal logic to help organizations automate operations and make faster decisions. Schnapp noted that the technology goes beyond traditional analytics tools. While the stock currently trades 48x EV 2027E revenue, making it the most expensive in enterprise software space, Chappell said the valuation reflects Palantir's long-term potential in a rapidly growing market. And he also downplayed competition concerns with firms like Snowflake, arguing that their Databricks focus on historical data analysis, whereas Palantir operates on a decision-making platform. This is something I've said before, and this is why Palantir is number one. For all of you guys that stuck around to the end of this video, I have the bonus pick for you right now. If you guys want to turn your losses into wins, the link to join the Discord is in the information box below. It drives me every single day to help people just like you achieve your goals and your dreams. I'm living my dream life, and I told myself when I was able to achieve that I would help others. So look forward to seeing you real soon. Like I said, the link's in the information box below. You guys can join at any time, and I look forward to helping you in the Discord real soon. The bonus pick for today, which we're going to go over very briefly, is none other than NVIDIA. I had to add NVIDIA to this list. It did not make the top 5 because the amount of growth in NVIDIA is very sketchy because of the amount of market share. Will they grow? Absolutely, almost for sure. But how much growth? Will they grow like Palantir? Well, no, they probably won't, because Palantir is a new generation of software, AIP, in a completely different direction than just AI and tech and chips. Now, granted, NVIDIA is the king. So the days of NVIDIA doubling and tripling and quadrupling in the same year or in the same quarter, based on all of this data and based on the history of the stock market and how things generally work out and based on NVIDIA themselves, it's highly unlikely, if not impossible at this point, as we're in a different world than we were in COVID, and pretty much anything that happened between 2020 and 2022 is up in the air because of the volatility, the excessive volume in the markets, as well as inflation, inverted 10 and 2 yield, and a lot of things we discussed in this video. NVIDIA is a great company with a lot of potential growth still left on the table. It's just not warranted to be in the top 5 when it's likely going to be consistently giving up its market share to AMD, NVIDIA, some to Taiwan Semi at some point, Qualcomm, Broadcom, as well as Palantir in certain areas, and Microsoft, even Meta or Google. All of these companies are going to start acquiring more market share, but more specifically AMD and Intel, Qualcomm and Broadcom. I think that Taiwan could also have their hands deep in this and start making even more gains. But then again, they're supplying NVIDIA. NVIDIA's real competition is coming from AMD and potentially Intel. The market share condition is just a pretty big hurdle to overcome. They already have a lot of it, and it's hard to go up when you're already at the peak of the mountain. Going down is the only place left to go. And if NVIDIA does everything they're supposed to do and more and grow beyond our expectations, we've already expected that. That's what we expect from a company who's number one. So really at this point, the amount of growth out of NVIDIA is likely, very likely to be less growth than Palantir, AMD, Intel, Google, Microsoft, or the other stocks that I've talked about, which is why it didn't make the list, but it made the bonus list because it's still a great stock with a lot of room left to grow. Just not as much potentially as the others on this list. I look forward to seeing you guys on the next uploader video and in the Discord in the near future. The link's in the information box below. I look forward to seeing you guys, and I'll see you on the next video.